Okay, guys, welcome to the March 1st, Sunday, 2026. We got a lot to talk about. We got a lot of setups that we got to go over. We had a lot of stuff happen over the weekend, and we'll talk about how that should affect the market going forward. Take a look at the risk disclaimer, and then we'll go ahead and get into the charts in a few. Okay.
Okay.
Okay. All right. Can you guys can see the other screen, correct? You guys can see my charts.
Yeah.
Okay. Cool. So let me catch that. Okay, cool. So let's get this out here. Picture automatically. Let's go out this time. Okay. All right. So we have had an interesting weekend. We had Iran get attacked by the U.S. and Israel, and that has already had an impact. We've already seen the market start to sell off already. You can see our headline here on Forex Factory, and what we saw was retaliation returned by Iran. He hit Iran hit several different locations, and there were casualties on both sides so far. Uh, Trump mentioned just a few about 3 hours ago that this will continue. So this isn't going to be a one and done kind of situation. There will be continued days of fighting. Make sure if you have family, friends that you know, please check on them. I had to do the same thing for my cousin to make sure he was good after hearing that was there was an attack in Doha, which is where my cousin is, and I have friends all over the GCC, so it was very important for me to pretty much be up all night that night. When I this was the first notification came in around 2:30 a.m. on Saturday night, and that would have been roughly around 9 something a.m. Middle Eastern time, Doha time, around that time. Around 6:30, 9:30 a.m. Is when most of that happened. So there also was a spike in oil prices, and we also saw a drop in gold as well. And that's probably going to be some of the biggest things to pay attention to going into this week. Uh, we have some red folders this week. Monday, we got manufacturing PMI, and we have an expectation of 51.7, and we have manufacturing prices as with the expectation of 60.6. And then we have on Tuesday pretty clean on Tuesday, no red or orange folders. Primarily going to be just some light news throughout the day. Probably be looking for earnings, or we'll probably be looking at to see what we do with regards to uh, the military efforts from the U.S. and Israel. Hang on one second. Let me uh, let me check something out. See if I got enough charge on the laptop. Then on Wednesday we have ADP farm rolls. There's going to be private sector jobs. They're expecting 49,000 jobs for the ADP farm roll, farm non-farm payroll. And then we have services PMI, ISM PMI, and we do have crude oil. It's a yellow folder, but we probably want to pay attention to this. One of the key things about them attacking Iran is that Iran provides, I think, 20% of the world's oil supplies. one of their biggest customers is China and Russia. And by them going into military actions against Iran, they have decided to close down the Strait of Hormuz. The Strait of Hormuz is one of the most important waterways in the world, actually, because of the fact that a lot of oil travels through that strait, and that's controlled mostly by Iran, and then UAE and Oman has a portion of it. So it's very important that how things correlate to the war campaigns, pretty much. I don't know how to word it properly because I don't know how you want to word what just happened. Um, to take my personal opinion out of it, to look at this from just a how does it affect the financial markets is kind of a difficult situation because it just seems as though um, peace talks were in place and something broke in between that process. But um, so even though this 1030 is a yellow folder on Wednesday for crude oil inventories, keep an eye on it and just note there's no forecast on this, but right now it is 16.0 million was the previous release, and we'll see what happens to that going into Wednesday. Then Thursday we have unemployment claims. Unemployment claims coming in around the last week at 215,000 is the forecast. We had came in at 212 last week. We were a little higher on unemployment claims. Uh, that'll probably be one we want to pay attention to. And then finally, we round up Friday. We have Friday NFP numbers. We have unemployment rate, retail sales month over month, core retail sales month over month, and then hourly earnings month over month. For hourly earnings, we have a forecast of 0.3%. We came in last month at 0.4%. We came flat in core retail sales, and then retail sales month over month, we came in flat last month. They're expecting core retail sales to be flat, and they're expecting retail sales to be down by 0.3%, which makes sense because the holiday spending is over now. And then unemployment rate is currently at 4.3%. They're expecting a match on that. Let me just double check. They're expecting a match on that, but it's probably going to come in a little higher, even if it's just slightly, maybe 4.4%. But we'll see. I don't want to give any projections. Then keep in mind this weekend, going into March the 8th, we have daylight saving time. So we're going to spring forward on the clock. So just keep that in mind going into next week. So we'll get our hour of daylight, uh, extra hour of daylight, so we can um, see some later sunsets, and that'll be it for the week. Let me let's pull up X, Twitter, so we can get our. Let's see. We'll check out our earnings for this week. Mm, 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 mm. A lot of familiar names. Nothing huge. Probably want to watch CrowdStrike. You want to watch your defense stocks this week too. The defense area could be driving some of the markets, somewhat drive the markets as well, with all the conflict that's going on right now. Let's see. Nothing on Monday too big. Berkshire Hathaway. They're not going to move the market, but they are reporting. Got Target, CrowdStrike on Tuesday. Um, Nothing big there. Wednesday, no big names on Wednesday. Some familiar names, but no big names. Thursday, same thing. Familiar names, no major market movers. So looks like we should have a clean slate as far as earnings goes. Our biggest day we want to pay attention to earnings is probably going to be Tuesday. Tuesday, since we don't have any news, watch out for any weird earnings or weird news releases on Tuesday. If we get any major headlines, probability goes to Tuesday, since there's no economic factors to drive the market up or down. You'll notice we have clean slate red folders from for Wednesday, for Tuesday. So likely you might get a headline story come out, or you may have some kind of, um out of out of the economic calendar news releases. So keep that in mind. And other than that, it looks like we just have just some general stocks that are gonna move, but they probably won't have a big reaction to the market. So, and then let's see, let's check the headlines real quick. We did have one thing just come through. Yeah, Trump mentioned, he vows to avenge the death of the U.S. service members uh, who were killed during the combat operation. So that's again signaling the continued response. So it's a regime change. The goal was for them to change the management basically. So um, keep an eye on that. Right. Let's go to the charts. Let's go to the charts. I hadn't marked the charts up yet, but we can look at them all together. So we kind of already have dollar already pushing up. You can see on the charts here. We took this low out already and left another low here. So we'll start on the downside. Give me a sec. Switch. I'm losing power. Can you guys still see my screen?
Yeah.
Okay. Give me a sec. Yes, sir. Did I just lose my mouse? Yep, just lost my mouse. So, guys, this no computer thing has been kicking my butt. Okay. All right. Never mind. All right. So, this was our low from Wednesday, and this was the previous day low for Wednesday. So that's gonna be one of our downside targets. We had a low of the week here at 9. 97, 335, 355. At 368. Some previous info. We just took the previous week high over here on the open. And if we do decide that we're going to start to, if we ever get to the point where we're going to sell off for the week, we're going to need to trade below this gap. So we'll see. Okay. Computer's slowing down again. Just give me 1 second. Give me 1 second, guys. Okay, I think I'm back. All right. So we had our gap, and our gap basically is in the middle of last week's range. Um, and you can see we got our gap low at 97.646, and our high on that gap is 97.874. That's how we're gonna monitor this gap probably for the rest of the week and see how it plays out for the rest of the week. That's gonna be an important gap because this gap is coming with such strong news, and likely we'll retrace into that at some point, even if it's just for a minor drop into that gap. Probability, we will likely see that we get a retracement if we sell off to the downside into the gap. And if we do get through the gap, we have this inverted fair value gap on the higher time frame that we need to kind of watch out for. It's 368. And then we have some relative lows, some previous day lows inside of that gap. That'll be our downside targets once we start, if we start to see it sell off. And finally, we got this last previous week low that's right near the low of that fair value, this inverted fair value gap. So this is gonna still be in play for us to have this downside target. Then for our upside targets, we already taken out this previous week high. We just took it out on the gap. kind of want to see the 3 push down in below this gap and near this inverted fair value gap before we try to see if we're going to get a bounce on the downside. And then, like I said, if we do, we've already got our 0 to 1 high already made right here. Right now, we're looking at a possible 1-2 retracement. The 1-2 retracement should pull us back into the gap. If we get it, then we could see price push up from there for the 2-3. Not probably going to be looking for any retracements until we get right around the yearly and maybe even the daily order block. So I wouldn't really be looking for downside retracement until we come to something major on the higher time frame. And right now, our major higher time frame target is this this order block. So I'm thinking that this 3 pushes us up to the high, and then 3-4 retraces above the yearly or right around the yearly, and then our 4-5 takes us into this daily order block level or somewhere near it. Before we do so, we don't have to come into this fair value gap. We could retrace on the 3-4 retracement into this, not fair value gap, but the weekly opening gap. We could retrace into the weekly opening gap on the 3-4 retracement. And that's mainly because we would be coming into the yearly opening price. So that's why I mentioned that us rejecting right here could also push us in here to get the 4-5 move to the upside. So keep that in mind. This is primarily due to dollar being will be strong with when there's war, dollar is strong. So that's another note you probably want to keep in mind, keep as a gem. When we especially when you first get news about war, the initial impact is strong dollar movement. So keep that in mind and watch out for how dollar responds. Okay. Tracking? We tracking?
Yes, yes. Yes, yes.
Yeah.
Yes,
Yeah.
yes. Yes. Yes, yes. All right, let me drop this in the chat. Yes, yes. Where did that come from? I don't know where it came from. Let's see. DXY charts. Yes, yes. Okay, let's go. Gold. Gold gap now already. Gold already gap down. Where we at? Gold already gapped down. Oh, it gapped up. Sorry. Come on. Come on. The way this is moving. Okay. All right. What do we got? Okay, we got gold. All right. So gold is continuing to push. We had a gap. We traded through this 4-hour fair value gap. We left a daily opening gap. Pull this out to Wednesday. We've already retraced into the gap. In there right now, actually. And you can see we've already made what would have been a 0 to 1 move to the upside. And we got our 0-1 high already. So now we just need to see, like, where are we possibly expecting to go? And if that 0 to 1 high, was that made at anywhere in particular? Let's go higher time frame. And let's see what's above our 0 to 1. And let's hide this stuff real quick. Just go to the daily. So what's above the high that we just made on the daily? The all-time high. It's not too far. All-time high is not too far. Let's see. Let's go. Let's just check weekly. I don't think it's anything significant other than the swing high on the weekly. Not really, but from the weekly, let's look at this wick. We are right around 50% of this wick, so we could use that. Not going to though. Give me 1 second. Give me 1 second, guys. How was you guys' weekend? Did you guys enjoy your weekend?
Yep.
We did. The girls made it to the All Stars Championship, so had a good weekend.
Okay. How many points are you giving?
10 points today. And then yesterday she only did 2 yesterday.
Okay. Okay, so let me do time over here. It's running really slow over here on my end. So because now I'm on my computer right now, so it's running real slow. It's lagging right now, so I'm trying to close out anything that I might have open in the background, so I can try to get this to work a little faster. Let's go 4 hour again. Nothing. I see we got a huge wick, but like nothing. And we got this fair value gap that's right above us on the 4 hour. I guess we can use this. This will be one we can use right here. It's upside target over here. So let's use that as our upside target for now. And that works out because we've already sold off from here once. And then this is the bearish fair value gap from the 4 hour. And then let's just make sure we got the high of this candle coming in at 56.9. So our high for this, for the low, 56.9. It's going to be our upside target for now. And then we got an all-time high, which we should see, if everything pans out, we should kind of start seeing gold pushes, maybe even above this high. It just depends on how we react to the news on the operation in Iran. So if we do like we think it may do, where they start reaching for safe haven stuff, gold is going to be one of those ones. But I'm not sure if your broker is letting you trade gold right now. So kind of keep an eye on that too. So, all right, now we can go to the 1 hour. This is a better picture. So our 0 to 1 high has already been made. Not really looking for rejection until we get up around near this 4 hour fair value gap to the downside. So in our case, probably wouldn't look for any rejection until we got up here around this level, or at least around the low. We just made our 0 to 1 high above this, so and we already doing our 1 2 retracement as we speak. So and so now our 1 2 retracement should take us into the fair value. I mean, into the weekly opening gap, like we already are right now. So that means our 2 3 should take us at least above this high that we made. I would not really expect for the 3 4 to come back into the gap. This down series candle will at least attempt to be used as a order block. So this actually may go higher. Like I said, we should be if gold responds as a safe haven, we should be taking out possibly that all-time high on gold, because that'll be a driving factor for us to take that out. So take out that all-time high on gold. So I would pay attention to gold this week. Um, and like I said, I'm not sure if they're gonna let you trade it because of what's going on. Is a lot of brokers have been taking gold off of the rotation of tradable pairs, tradable assets. So I would keep that in mind too. Then we had this price gap that we were still in, and we had a swing low from Friday. Like this is probably going to be our downside target if we do get a push down to the downside. This is probably will be where I would be looking for us to come down to if we were to sell off on this. Not, I wouldn't really be looking for that sell off too hard. And again, if we get it, it's gonna have to be something that drives us. Because right now we will probably use gold as a security blanket right now. So on the downside, we would need to trade back through the gap that we got to get this downside move. This was our low from last week. Worst case scenario, I think we pushed down to the low, around the low of last week, but not too much outside of that. It will be what I'm looking for. And if we do get a bounce, we trade back into this gap, and that's where we get the bounce from. So probably around three, the three low or the five low. Probably the five on this one. The three low, I think the three low will take us below the low from Friday, and maybe even below this swing low from Wednesday or Thursday. This is Thursday. Yep. And then if we get that, then the 4-3-4 retracement takes us below the back into the range, and then our 4-5 would push us to the downside. Worst case scenario for me. But I think that before we make this move to the downside, I think we would try to hold inside of that new week opening gap first. So if we get into the new week opening gap, we really got to pay attention to it because it's going to be like high probability that it's going to try to bounce from there. So keep that in mind. Then also this 4 hour fair value gap that we traded through already, it's been inverted. So it may want to, that'll be another area that it may look to trade and hold to as well. So keep that in mind. So mostly the upside is what I'll be looking for on dollar. I mean on gold. So if before we try to sell gold, I would say if we don't try to sell near this 4 hour fair value gap, I probably wouldn't be looking for it unless we've traded through this new week opening gap and below it. That's the only time I would probably look for it to sell off. There's a order block and fair value gap set up right around here. So I would probably be looking for a move to the downside initially below this area. There's the order block right here, and it's been inverted. There's another order block right here, and the fair value gap inside of that has been inverted too. So I'm not going to draw it, but that's why our one is right here, and we would need to push up and then trade through it in order to get the move further. So that's why I would be looking from there. I'll let you put that on your charts when you see it, but I'm not going to put it on here. Just know it's there. And let's go ahead and drop gold. Let's look at VIX. VIX should probably gap up on the open. When we do open up on VIX, which will be 3:15 a.m. tonight, VIX will probably gap up. And when we gap up, we had our close here. Our gap up should probably take us above this high. So we'll take a look. Let's see. This is going to be our first target. this high from last week will likely be our first target on VIX. So the way we respond to this swing high will let us know how we move forward. So already I can say at least one of these highs, this one or this one, will be right around where we gap up. So this 0 to 1 is going to probably seem a little exaggerated, but we'll probably get our gap here. And, then our 1 2 will retrace into the gap somewhere. And then our 3 4 takes us above these previous highs if we get them. And then our 4 3 4 retracement probably holds around this area. And then our 4 5 pushes us above the 3. And that 25 level is what we would probably need to shoot for on the volume. 25. So that 25 level, that we know that'll be a key level because it's a nice, important price level for us to see price trade through. So that's my upside. Then let's extend these out. This price gap, that's going to be an important area. Once we get into that area, it's going to be one we want to kind of see this 3 4 move or 1 2 move, however it plays out. We want to probably see price hang out in here for a little while and then move up higher from there. Let's check the 4 hour, see if we got any highs above the 5 that we might want to take out. Not really. So yeah, I like this. Let's see. Yeah, this seems about right for our 5. The 4 hour, let's check that again. We got this price gap already. There's another price gap right here. There's another small price gap right here. And that's right around 25.25. Then there's an order block right here around 25.98. So basically 26. I'm not gonna put that on here, but yeah, I will. Yeah, I will. I'll put the order block and the price gap actually. We're gonna need to watch out for that. And this is the order block from the 4 hour. Oops, that's a little too far. We'll fix that. And then here is your small little, I wouldn't call it small, but there's your price gap here. And let's get the exact price on that. Okay, 25.21. 25.21. That's your bearish price gap. Okay. Back to the 1 hour. And let's just get it dialed in. 341. Okay. So here is our 5. Probably here. Probably wouldn't look for any retracements unless we got to the 3 and we wanted to retrace, or the 5. I like the 5 being the highest probability. And this also means that this probably trades through this a little more. Downside for the volume for VIX, if we get a downside, it's probably going to come when we get this gap opening. When we get our gap to the upside on the open. So that gap will probably, just like I said, it'll gap up to the upside. If we were to get this 1-2 move, I'm gonna do things a little different. I think that the gap, once we get the gap, then we'll see like how this plays out. I think we don't get the same normal. We don't have to consider the normal push to the downside first, because we know with ES pushing up so far that we will have the VIX open with the not with the indices pushing up, but the indices pushing down the way that it did. We'll probably get a gap on VIX to the upside. So since we are expecting a gap to the upside, we can probably just go ahead and say that we don't need to start this from here. Our downside move will happen if we trade below the gap opening, which should be halfway in between where we open up around on VIX. So, and then if we can trade below the low of the gap, then maybe we can get a move to the ups, move further to the downside, and then we can target some of these lows. So this 0 to 1 should take us below those lows. And there's a little order block right here. There's a fair value gap right here. There's your change in direction. So maybe we get our here, or 0 to, no, not so much. Probably get our 0 to 1 around here. This last week opening, our 1-2 retracement holds inside of the gap, and then we push down lower. And then our 2-3 takes us below these lows. And then if we want to get a bounce, the first area we'll probably try to bounce from is going to be the 3-4 move. But I wouldn't really look for the bounce until we got down to 5, probably. That's going to be highest probability area, because at that point we're sweeping liquidity. And we would, our best bet for a bounce really is the 1 or the 3. So I'll actually take that back. Our 1 or the 3 is going to be highest probability, because that means we're holding inside of the gap if we get one. But like, I fully expect us to get a gap on VIX on the opening. Worst case on the downside, I'm thinking that this is going to be our low, but we could go as low as the 17.76 low. So this is my main area to the downside I would look for, but again, we could go a little lower than that. So keep that in mind. This is our low from Friday. Or is that Friday? No, that is Thursday. And this is just a swing low. So but for the first leg, I expect us to push up on that first leg. So I wouldn't consider the downside area until after we watch how price responds to the gap on VIX that I'm pretty sure we're gonna get. All right, so here's VIX, and then we can go ahead and go to Dow. So just like we had on ES, we already got had to close here on Friday and open up down here. So we're already trading into the gap right now. Just to confirm. Okay. We've already traded into the gap. We took this liquidity, we took the monthly low, and we took last month low, which was the February low. And we've already taken that previous week low over here. And we pretty much almost tapped the yearly opening price. So right now, my first real downside target is this previous month low. We could go lower than that, but this previous month low. Let's just check the daily, see what's below that. So let's get rid of all this for now. This is that monthly low. We got another low right here. That low has a gap near it right here. So from a downside perspective, that low takes us below 48,000, and wicking this low would make sense and trading this low. So from a downside perspective, we do have this order block right here, this gap, and this swing low. That's the next area I would consider uh after if we were to take this low out. So that's what I would consider if we have downside movement and we continue to the downside. So this low is a previous week low. And just make sure we got the right numbers. Okay. And then inside and near that low, we have this small little gap, which may hold us up. We get down there, but if we get that previous month low taken, this will be where I would want to see us react from at one of these spots right here. The opening on that is 927. And this daily gap. Okay. So we got our daily targets in line right now. So if we do sell off, these are going to be the main areas that I look for. 368. Okay. We got our yearly. That's going to be another target if we start to sell off to the downside again. We didn't actually take that, but we could be pushing lower. So if we are looking at this as if we started here, we've already made our 0-1 move, right? You can see we made our 0-1 move already. That means that if we come back into this gap and we are going to stay sell side, we should sell off somewhere inside of this gap. So this 1-2 retracement should fail. And if we're gonna fail, we're actually in a great place for us to fail right now, but we'll have to kind of monitor that to see if we do. Then, if we get the sell off, we should take out this low we just made, trade into the yearly price, and that's where I'm seeing us go ahead to take out this monthly low or trade somewhere near it. But let's just assume we just get near it, the 4-3-4 retracement fails at either the yearly opening or when we come back near the opening, the new week opening gap. And then the 4-5 sell-off takes us into this range down here, right? We could get bounces from either the 1 or the 3 would probably, in this case, it just depends on the bounce itself on this week is going to be a little different. I'm not gonna really gauge because we could bounce at the 1, 3, or the 5 because of all of the news going on with the war. So this could bounce at any one of these swing lows at the 1, the 3, or the 5. So I'm not really too keen on making a projection as to where we can bounce, but just know there's a reason for us to bounce at any one of those. Then our upside move. Would need to come after we've balanced this out, this range, the gap range. And then the first thing is we got a couple of little swing highs right here on the lower time frame. That's going to act as a liquidity pool. We could be swinging to take those. And then we have our previous day high from Friday as a target. First upside target for real. And then this is, oh, we can get rid of you. We can get rid of you. And we can get rid of you. And we can get rid of you. You're gone. We have some this weekly high from last week. That's probably be the target, overall target for the week if we start to push up. We could go higher, but that's going to be my overall target for this week if we do push up higher. This was the previous week high from last week. There's another little swing high right here. We could consider that too, but I'm not going to draw it on the chart. You guys can catch that one on your chart because I know you see it just like I do. So, and if we do push to the upside, I think our 0 to 1 takes us above these highs, and then we get to the we either have a 0 to 1 that either challenges this high or fails the high, and then our 1-2 retracement holds us inside of that little range. Our 3-4 takes us above this little high right here. I'm sorry, our 2-3 takes us above this little high right here. And then our 3-4 retracement holds. There's inversion. There will be inversion inside of here. And we hold inside of that little inversion. And then our 4-5 takes us above this previous week high right here, and as well as this one from the week before, 365. This one's a previous week high as well. And just remember, these are projections, so we could. This doesn't have to move in this same way. I just want you guys to know, just keep that in mind. These are just me drawing the projections are just to give you an idea of where we could actually see price respond from. Doesn't necessarily have to respond from there, but if if I'm showing you that we have a swing high at a 1, a 3, or a 5, it's because there's some type of bearish point of interest. Like this is still a bearish fair value gap, right? So making a high in that bearish fair value gap makes sense for us to do it, right? It's not because it's gonna actually fail right there, yes or no, but it is high probability that it could. So that's kind of the way, just a reminder that, that's why. The same way with our swing lows, our 2, our 4, those swing lows are, hey, if it does reject and it's still going to be bullish, it could retrace to this given level because there's something bullish that it could be retracing to, even if it doesn't exist quite yet, right? There's a candlestick pattern ahead of it, price action right now that could respond in a bullish way, right? Just like we got this gap right here, and this gap, even if I didn't have this new week opening gap, I would automatically assume that I would have taken out this low right here. The first thing I would assume is we would be trying to take out this low right here. And that's let's get rid of him. The next thing I would assume is we would take out this low. And the next thing I would assume that if we got below this low that we made right here, I would be taking out these lows and coming somewhere near the yearly opening price. So even if we hadn't have gapped down here already, this probably where I would have been looking for my 0 to 1 move, or the 0 to 1, then 2 1 2 retracement, and then either the 0 to 1 takes us below these lows, or the 2 3 takes us below these lows, and we get a swing low at 1 or a swing low at 3. But since we already made this move down, and now I know we are trading back into an area that's for the moment bearish, right? When you get this weekly opening gap to the downside, that means it's bearish, right? At least for now. We could balance this out and trade back through this to the upside, but we would need to see price hold in here and reject to go higher, right? So that's what I mean. Like, and then same thing with these lower highs. The lower high is, if I push down and took these lows and I did my 1 2 retracement, I'm expecting for a price to retrace inside of this range. And if it's bearish, then I'm assuming that we will get a high inside of this range somewhere. Probability says that it's the low, middle, or high at one of these areas. So if I'm expecting a lower high, it's going to happen at the low, middle, or the high. And since we already see we're not getting it at the low, right now the probability says it's going to be at the middle or the high, or in between that way somewhere, right? And then if we do get this the 2 lower high, then if we get this 2, we automatically know we're going to probably want to target this low. So that's where our 1 is, right? And if we get this taken out, then the 2 3 retracement is going to try to take out this low. I'm sorry, the 2 3 move to the downside will trade outside of this, take out this low, and will trade below the yearly opening, likely. And then we either take this low out or we bounce. And if we bounce on the 3 4 bounce, that means we're going to have a potential to reject at the yearly, or we reject somewhere near the new week opening gap, probably the low, or the daily opening price, or the weekly opening price. And then if we do reject, that makes the 4 our swing high and our lower high. and then it likely tries to take out the low that we made right here. If we haven't taken this low out, it takes out this low. And then if we do want to try to bounce, it's either going to try to bounce somewhere around here, here, or here. So that's what these projections are kind of telling you, to give you an idea of areas where we could bounce. Not to say that it's going to come to that particular point and do anything that I'm saying is going to do. It just says that there is a reason for it to do something at that particular level. And then you need to watch price action and see how it responds to that level to say, hey, yes, it is doing what I thought it would do at this price point. And because I know it's doing that, then hey, I'm going to take a trade at that particular level based off of that if it all lines up in agreement with what we looking at. That makes sense?
Yep.
Yes, it do.
Okay. So here's NAS. We already got this one marked up for the most part, but I am going to have to make a couple changes on it. Same situation, right? We have our gap to the downside. And in this particular case, I had already kind of started doing the chart on this without knowing that we would gap, right? And this is a good example of what I was just talking about. Let's flip this. All right, so you notice I didn't touch the projections, right? Our 0 to 1 says, hey, we know if we do get a 0 to 1 move, it should take out this high. There's a fair value gap inside of here, right? So let's just say I'll make a couple of adjustments, right? We come to the 0 to 1 takes us above this high and right around here. Reason why I'm picking this as our one is because this little candlestick pattern means that there's a lower time frame order block right here. So that's why I'm saying that that could be our um, 0 to 1 high. Then our 1-2 retracement, right? There is a fair value gap that we traded into to the downside, that this middle could be where we see price hold. It could swing back inside of here somewhere a little bit, but overall, I think most of the price handles, if we do hold for this 1-2 retracement, is roughly around this high, this middle, and then this. If we want to draw this, I didn't want to put it on there, but just know on the 4-hour chart, you can see there's a clean 2 candle pattern fair value gap right here. So this to this is a fair value gap to the downside, right? Okay, so that explains that. Then our 2-3 retracement pushes us probably up higher. We got this new day opening gap right here that's still in play. So that's where I would assume that we get a 3. The 4 would happen around here. The 5 would take us above these previous day high, the yearly above that gap, and probably into this daily order block. And then if we get a retracement and rejection, likely happens at the 5 or the 3. We, to reiterate what we were just talking about before, you can already see my projection for the 0 to 1 move was first off for us to take out this low, right? So already you can see, like, hey, if I was to project where we could possibly go, that 0 to 1 should take us below this low. And even giving us the means to take out this low as these lows as well, because they're close enough to this low to consider that 0 to 1, where we would get this 0 to 1 to take out this low. And in this case, it took out these lows as well. So if I'm seeing a 0 to 1 and I know I got a low close to that, I'm thinking like, yeah, this 0 to 1 will take out this low, but it could also include this. So without like drawing this all the way down, you know when you got the lower low or the lower high, you could consider like the wick would take you through these lows as well. So imagine this being the body of the candle right here at the 1. And then if I'm expecting this to take out this low, I also know that because these lows are so close in the range that we could probably take those out as well, right? And now this 1-2 retracement says, hey, I'm coming back into this new week opening gap. Am I going to hold to the downside because we gap to the downside on this? Am I going to hold to the downside on this and stay bearish since we already been bearish, right? And we need to see price reject on the 1-2 retracement at the low, middle, or the high, or in between the upper quadrant, right around here, or in between the lower quadrant, which is right around here. And right now, we're near the upper quadrant midpoint, which is roughly around 24,885, right? If we draw that on there, let's put it on there. Upper quadrant is here. And let's put the 25. And we'll just make it black. Almost. I was exactly spot on with that. That's pretty cool. Right? So if we're going to stay bearish, we need to hold at this point, we need to hold at this 24,885 level or 24,952 level, right? And then that should set us up for the 2-3 move to the downside. Our 2-3 move will take us below the hello we just made right here. And then we get into a new week, new day opening gap and a price gap that's we've already bounced up from at one point before. If we get through that, we could see if we do make our 2-3 move to the downside, our 3-4 bounce happens around in somewhere inside of here, maybe even tapping this new week opening low, previous week low. Sorry. And if we get a retracement on the 3-4, this could also bring us back in here to go higher. So I like the 3 and the 5 for us to move up from. If we fail and make a high inside, a lower high inside at the 4, our 4-5 move down takes us back below the daily opening price. We take out 3, we take out this low if we haven't taken it out on the 3 already, and then we come down and trade below this new day opening gap. And this 5 could bounce right here, or we can even tap this yearly low as well. So keep that in mind if we do get down there. That makes sense?
Yeah.
Okay. So this is NQ. Just had to make a couple minor adjustments to NQ. And then finally we got ES. ES is gonna be just a couple minor adjustments. We got that one. I was able to get that chart done before the session, so we should be able to run through that one pretty quick. Give me a second. All right. Okay. So we are inside of this inverted fair value gap. We were on the close, right? But we've pretty much traded through that, so we can get rid of that. And then you can see, same as before. All right. Prior to me realizing that we would gap, I knew we would gap, but I just didn't add it on the chart because I didn't know what it would be until we got our opening. But so our 0 to 1 projection initially should be below this low. That's where we got this at. So for now, we got our 0 to 1. It took out this low, it took out this previous week low, and we traded down into this new day opening gap. So we got our setup already pushing us to the downside, right? And then now here's our gap that we need to update. The gap opening is 2068.29. $68.29 even. This is the new week opening gap. And we'll just reverse this. And again, same way, right? Let's just go ahead and adjust this. Our 0 to 1 right now is here. Our 1-2 retracement, again, we need to sell off. If this is still going to be bearish, right now it's bearish. It needs to sell off at the middle, at the low, middle, or the high, or the upper quadrant, which is roughly right around 68, 63 area. And the middle lower quadrant is right around 68.40. Right now, this last swing high on the lower time frame is putting us right around the middle that we reject. So even now, if you were to trade London or going into Tokyo Sydney session right now, if I was looking for a setup, I would be looking to see how we react around the high here if we were going to take a trade in the after hours markets, which is right now. So if you were looking for a trade right now, we're actually in a good spot to be looking for a rejection if we wanted to take something right now. So if this even though this is pushing up right now, this has the potential to give us a swing high that'll be a lower high here, right? So this was the last high we made right here, this little swing high. This one right here, and so this is our last high, and this is just an internal liquidity. So since this is our last swing high, if we made a high at the 2, that would be a lower high in reference to the last high that we made. So, and then if we get that, that would give us the catalyst that we need to do the 2-3 push to the downside. And our 2-3 should take us below the 1. And again, this was already marked up, but let's just make the adjustments we need. Our 2-3 should take out the 1 and maybe even take out this previous week low. And then let's just say we try to bounce from here. We could even go as low as the yearly now, just like we did on let's just double check, see what we got below that. Yeah, we already got this on, so we won't bother to consider the lows that low yet, but we do know we have another low inside of this previous week low. that we could be coming to try to take out here. But overall, the 3 takes us here. The 4 rejects at the low of the new week opening gap that we just made, and maybe even somewhere around inside of this new day opening gap if we get below that. Let me just fix this. And then our 3-4 retracement, I would say that that could be a high probability area for us to bounce, but I would like to get the bounce from the 5. Higher probability is the 3 or the 5. And again, if we do push up higher, we got this. If we push up to the upside, our 0-1 takes us above, at or above this high that we had here. There's another high here. I'm not gonna add it, but just there's a yes, I will. I will add it. There's a little swing high here. And the 1 or the 3 are made at or above these highs. So we can see either one of the highs get made there. And then that'll be the first area that I would look for a rejection. Our 3-4, there's a fair value gap to the downside right here, and there's one inside of this range. And then we're inside of a bearish one, so we could see if we get a back above these highs, we try to hold near this the low of that 4-hour fair value gap, which is 68.98. Let me just pull this out a little bit. And then we try to hold near the yearly opening price, which they all pretty much line up with right around here. Our 3-4 retracement or a 1-2 retracement could give us the room we need to push and trade above the 1 and the 3. And then our 5 just takes us into the high of this bearish fair value gap and gets us into inversion. And this is what I want to see for ES. So I hope this makes sense. I hope this was clear. Everybody tracking?
Tracking.
Okay. Okay. This is ES. Dropping that in the charts. And now I guess I'll leave the rest of the session open for Q&A. Anybody got anything?
I'm good.
Yeah, cool. I got some.
Okay.
So I was watching one of the news programs today, and they were saying that well, you already said watch out for gold, right? But they were saying
Watch.
how look out for gold securities, gold, silver.
Yep. Gold, silver.
Now they were saying that the crude oil, like barrel price might go up to like, I don't know, $10 to $15 per barrel coming out.
Yeah.
Iran.
Let me pull up oil right quick. Let's pull it up on this one. Let's check that. Which broker do I want to use? Do I want to look at the futures, or do I want to look at actual went? Let's just look at went. Give me a second. I just want to know which one I want to look at, because we can look at the commodity. I mean, we can look at the CDFs, or we can look at the futures. Let's just go futures. Let's go futures. Hold on.
So let me ask you this real quick while you taking that up. What is the crude oil symbol.
WIT.
That's WIT.
Mm-hmm.
So is that different from the other oil symbols?
Yeah, you got crude oil, and then you have crude oil futures. You have hang on one second. Give me 1 second. Let's go. Let's just look at the futures. That's the current contract. That's the March contract. Let's just look at it from a CDF perspective. Yeah, there we go. All right. So we already can see Friday closed. Friday closed at we were sitting at $67 per gallon, and we've already gapped up. We gapped up as high as $72.7725 per gallon. And we seeing prices kind of probably retrace, but I think this. Let's look at it from a daily perspective. So from a daily perspective, and because we got a lot of catalysts to drive prices, looks like we take out this $75 high. The other one is 79, so and that puts us pretty much right at $80. If we get any higher, yeah, there's going to be equal highs right here. So right now, this gap should stabilize and push us higher, just based off of what the conditions are in the market, right? And from a daily perspective, if we hold this gap, which is right now here to here, which we should probably hold. And this was a gap to the upside. Where did we open? 72.105. All right. So this gap should hold. If this gap's hold, we'll take out the high we made here at 72.725. We'll take this high. So right now, this is our first high. What's above this is what we saw on the daily chart. So if we take the high of this candle out, we're looking at this high right here as our next target. There's not a lot that we need to be concerned with. We already took out this high on the gap. We took out this high. We still got like this is the daily fair value gap right here. Bearish fair value gap. And where we got our opening was pretty much near the high of that. So that's kind of telling me that, let me extend this out a little bit. Okay. And then let's get this high on the chart. All right. So because we got a strong catalyst right now, which is the war, and we, like I mentioned earlier, we got the war. We know that whenever there's a strain on oil in the world, that drives the price of oil higher. Whenever there's a supply concern, in which this case with the war happening, and we know Iran is a major oil supplier, and we also know that they closed off the Strait of Hormuz. So that means there's going to be supply issues. When there's supply issues, that means and the demand for that is higher. And because that demand is higher, they're going to likely drive up the price, right? In which we already seeing this play out right now. So that means that we have a strong catalyst for price to go higher. And we've already gapped up. We took out this high right here. The next level that makes sense for us to go after is this high right here, the high for this previous month, right? So this is a very weak high at this point because we got enough news that we could see price push higher, right? So that's the context behind this, right? You have your we should have our follow through on this gap to the upside. So this gap to the upside that we have had right here. Let me clean this up a little more. So this gap that we've already opened up with is telling us all we need to know. And this is in line with what we were just talking about. The war started on Friday. There were constraints on the supply. That constraint put a higher price because the demand has been limited at this point. So we gapped up on the open. With them expecting the war to continue, that says, hey, war continues, more supply constraints. More supply constraints means higher oil prices. So likely we hold inside of this range somewhere. If we hold inside of the range, we just made a high here. That's our first target. There's not a lot between this high and this high that's going to really stop us from taking this high out. Maybe on the lower time frame, but higher time frame on a daily chart, which is one takes precedence, says we'll take this high out. If we continue, the $80 price target will be the next level. And there's a high right around 79, 79 or something along those lines from the daily that puts us pretty much near the $80 price target. The longer it continues, the more the demand for gas increases. Then you also have the normal seasonality. Summer travel comes in, spring travel comes in around, starting in May, April, May, and goes into July all the way down to September. And that increases the demand as well because you got people traveling more because people out of school and just natural off time, and people take vacation during those times. So, and then you have people flying more, so that also increases the demand for gas as well. So all of that in place falls in line for the oil prices to continue to go higher. Does that make sense?
Yes, it does, Corey.
Yeah.
Hey,
Oh
Corey,
yeah,
I
it
have a
makes.
question. Oh, go
I'm
ahead.
sorry. No, go ahead.
No, go
Go
ahead.
ahead.
Mine is more related to like trying to put this into Robinhood. So go ahead.
All information important. Go ahead with your question. I want to hear what you got to say.
Yeah, so Corey, like when I try to go like in Robinhood, to kind of look at to see if I want to buy a contract on this, on oil. Only thing I could see was a micro, uh,
By
a micro,
option contract, right?
yeah, like an option trade. I couldn't like
Yeah.
actually buy
You
it.
want to use GDX. Look up GDX on Robinhood.
Okay, GDX. Okay.
Yep. Look at GDX. GD.
What's GDX?
That's what you're gonna trade your options with. I'm sorry, not GDX. That's gold. Sorry, hold on. Give me 1 second. So for your options, you're gonna look up CL. That's the ticker for that, right? But in reality, trading oil options. Let me look up the best option. Yeah, CL, MCL, and
Okay,
CL is the
I found
mini
it.
contract. Yeah, CL is the mini contract. MCL is the micro.
Okay, MCL. Okay.
Yep. I haven't traded oil, so um, oil options. So I would just keep in mind that this could be moving sporadically. So if you're gonna trade it, give it, give it a small size and give it a nice, decent stop loss on there. Okay,
Okay. Thanks, Corey.
no problem. And this kind of did that answer your question, Cars? I don't know if he's still there. Okay, all right, but
Hey, Corey.
yep,
Okay, so my last question is this. I was watching some financial report saying that the deal for Netflix wasn't gonna go through. They didn't accept the bid on it.
yeah,
Yeah.
Paramount actually.
That's-
I think Paramount is taking the lead on that right now.
Okay. All right. So it was saying something about driving up the market price for several companies going to be involved in that merger. A lot of top brass news firms. They were talking about possibly cutting out 60 minutes because of this whole ordeal. So I'm trying to
Uh,
figure out what is that going to be a catalyst to look at some of the other like media platforms?
yeah, you get your when Netflix doesn't, you know, when Netflix struggles or you get another one of those major streaming companies struggle, then you look at its counterpart. So, you start looking at what's going to happen with Disney. You look at what's happening with Amazon streaming services and how it's affected from there. And somebody's probably going to pick up uh, whatever is missed out in that ordeal, right? And then when you looking at like streaming service plays, you need to also look at like I can't think off the top of my head, but you need to start considering stuff like subscribers, like how many new subscribers that this company picked up, uh, if they have any big name shows or movies that are about to release, which one of those companies are going to get that, right? Because that goes into like how the price fluctuates on those type of stocks. So once we settle out like who takes on that deal or not, right? then we need to consider like who's front runner right now for the deal. We already know Netflix is out of the picture, at least for now. Then, all right, if we figure out what company has the front runner, right? Does that company have anything new that's big about to come out, right? If they do, that gives them more leeway to drive whatever the price is that they're trying to make that deal for, right? So if they're trying to get the price to a certain stock level, right? Uh Paramount, and they maybe have like, okay, Paramount just picked up UFC. They're going to get increased subscriber numbers because people who watch UFC that were formerly on the Disney app, which is not anymore, they just moved over to Paramount. So if you're a UFC person, now you got to switch from Disney Plus over to UFC, over to Paramount. So they should pick up subscribers based off of that, right? Then, if we got any new movies or something like that that's coming out that company's going to be behind, then you consider that as well. So when you consider in those companies, you have to consider things along the line of subscriber usage, new releases, what that release, like how whatever it is that's being released, do they have a good fan base, right? Um, who owns HBO now? I think is who owns HBO? Um, Let me look that up right quick.
Warner Brothers owns HBO.
Okay, Warner Brothers, right? Okay, so we know Game of Thrones was a big hit, right? If I'm looking at company who when Warner Brothers first took over HBO, and I'm thinking like, okay, cool, I get to pick up those people who are fans of Game of Thrones, right? That's a huge population. So if I know that I have a new season of Game of Thrones coming out, I know I should have an increase in the volume of subscribers, right? That goes in line with my purchase price, right? So if I know, hey, I'm about to get an influx of subscribers, when I give you, if I'm gonna sell my company, right? And let's say they're, like they're trying to do with them right now, I want to get this price that you guys are offering me based off of my share, like the current share price. So I'm combining all of these micro aspects into my price, right? So I'm telling this person, like, hey, I got the new release of Game of Thrones coming out. I just picked up UFC, and right now my current stock price is, let's just say, $18 a share. I will sell it to you at $24 a share with the expectation that once this new release comes out, my stock price should go up to $24, $25 a share. Give me your best offer. That's basically what they're saying right now. Does that make sense?
Yeah, that made good sense, real good sense. But let me ask a question in tandem with that. Say unemployment rate starts going up,
Mm-hmm.
so people gonna be trying to cut costs in any form they can. So
Mm-hmm.
main things that are gonna go on is like subscriptions for unnecessary streaming that they don't need. So you
Mm-hmm.
think that we get our unemployment from what, NFP, non-farm
NFP.
payroll,
Yeah. No, unemployment numbers.
unemployment numbers? Okay, so if they come up high, do we need to start looking at that in tandem with like services that offer subscriptions and stuff like that too?
Once we start seeing those numbers come out of the norm, once we see unemployment rate start to creep out, like up 0.5%, up 0.25%, up a whole percent, then you need to start looking at that. You can look sooner, but it takes time for that stuff to kind of filter down into the price. So you may be expecting it to dump, or you may be expecting subscribers to go down, but you don't get that immediately. That takes a little while to make and take into effect.
Okay, that makes perfect sense. Thank you.
So, like right now, unemployment rate is what we say earlier, which we get unemployment claims. Unemployment rate comes in on Friday. They're expecting 4.3%. We start getting around 4.5, and 5% unemployment rate, then you may start seeing more of an impact on subscriber usage. But even that has its own caveat as well, because that's also like, what time of the year is it, right? Has, are you looking at particular company itself as far as the subscriber usage goes? Because that particular company may not have anything that is making a hit with the fans right now. So, it could play out like that as well. So,
Ooh, man, thank you. I appreciate that.
all right. Anybody else? Anybody got one? Going once? Going twice? All right. Well, that ends the session for tonight. I hope you guys got something good out of tonight. I will drop this session on YouTube, and for you guys that were on the session last week, I've sent you guys the personal link to the call we did on Wednesday. That's when we went over the 3D pattern. Keep in mind that's one of my favorite setups. We actually had one kickoff. If you look at this swing from this high, I'll let you guys see. We had one right here. It's in place right now. I wasn't really looking at this, but I knew we could expect it, but not one that I'm looking at the moment. But you would already be up 2-1. But all right. Hope you guys have a good week. Later.
Thank you.
Thank you. Good night.
Peace out.
All right, y'all have a good one.